Welcome back. This is Reliance Industries numbers that are just going to be flashing for you on your screen. The numbers will just come out in a bit. The profits have actually gone up almost 27% for Reliance Industries. So there you have it, the Q2 revenues at 2.32 lakh crores. This is higher than what the street was estimating. Our poll was 2.21 lakh crores. It's come in at 2.32 lakh crores, and this compares to 2.07 lakh crores on a sequential basis. So it's a good growth that we are seeing in the top line for Reliance Industries. That's a growth of 12% sequentially that we're seeing in the top line, much better than what the street was estimating. The EBITDA number has come in at 40,968 crores. Now, this as well is higher than what we saw in Q1, which was 38,093 crores. And it's higher than the estimates as well. So good growth in EBITDA. As you can see, that was the graph on your screen. So 40,000 crores, the net profits as well, 17,394 crores, while the poll was 17,974 crores. So this is, the net profits are largely in line with estimates. The EBITDA margins in line with estimates as well, 17.7% margins compared to a poll of 17.9%. So all in all, decent set of numbers coming in. There you have it. The revenue is much better than what we've seen in the preceding 4 quarters for Reliance Industries. Now, a couple of other details. It's a beat on most counts for Reliance Industries. The net debt has also come down for the consolidated entity, while the capex of the company is being funded by internal accruals. The O2C business, the retail business and the oil and gas business has done better than estimates, while Reliance Jio, whose numbers came just a while back, were largely on a flat, parameter. The revenue growth for Reliance Jio coming in at about 3% sequentially. More details coming through on the screen, but Mangalam is also with me. Mangalam, anything on the retail front?
Yeah, the retail business has done a lot better than what the street was anticipating. It was a stable quarter that was expected because consumer sentiment hadn't changed much between the second quarter and the first quarter. So the street was expecting just a 3 to 4% sort of quarter-on-quarter growth coming by. But guess what? The company's reported a 10% growth in their retail business quarter-on-quarter, and that equates to nearly 19% growth year-on-year. So retail revenue has come in at 77,163 crores. As you can see, that's a record high performance in terms of a quarter for the Reliance retail business. And not just that, it's grown profitably. The EBITDA for the retail business quarter-on-quarter has jumped by around 13%. It's come in at 5,831 crores. Year-on-year, that's a jump of 32%. So that means the EBITDA margins and the revenue per quarter for Reliance Retail this time are the highest that they've ever been. And we haven't even yet spoken about the festive season demand. So, this is a stellar performance which is coming from Reliance's retail business. No one on the street was anticipating this. No other consumer company has reported such good top-line growth as well. And, it's extremely strong. Reliance Retail on its base, both quarter-on-quarter and year-on-year for revenue and EBITDA is a big beat as per street expectations, and whichever way you cut it.
Okay, whichever way you cut it. So just getting back to the overall numbers, right? Better than what the street was estimating. It's a 12% sequential growth that we're seeing in Reliance Industries. Consolidated revenues coming in at a little over 2.32 lakh crores, much better than what the street was estimating. The EBITDA, core EBITDA number has come in at 40,968 crores versus 38,093 crores. So that as well is higher than what the street was estimating, and the profits are up 27%. Abhijit Bora, the senior research analyst at Sharekhan, joins us now to talk more about that. Abhijit, the numbers across all parameters are slightly higher than what the street was estimating, whether it's oil to chemicals business, both telecom and the retail business have been steady. In fact, the overall EBITDA is up by almost 31%. How are you reading into these numbers, and what is your view on how the stock may shape up on Monday?
So definitely both retail and digital services perform well, and they are significantly above our expectation. But for retail segment, we need to check about the investment income, which we need to exclude, which they report every quarter to get the core number for EBITDA. But prima facie, these numbers look strong. Even the oil and gas EBITDA has improved sequentially. O2 segment EBITDA of more than 16,000 crore is also very strong. So on all fronts, we see a beat versus our expectations.
All right. We also have Karan Taurani of Elara Capital joining us now. Karan, for the retail business, it's a 10% jump in revenues quarter on quarter, 77,163 odd crores. The EBITDA has also jumped by about 13 odd percent, but like it was pointed out by Abhijit, large part of the EBITDA, could also be because of the big fundraising that happened this time around, and maybe some investment income coming in on account of that. But retail revenue of 18.8% year on year, it's a stellar set on this base, especially 77,163 crores a quarter in a quarter where consumer sentiment has been muted.
Yeah, so I think Jio has launched multiple initiatives on the retail side, including their new BPC platform, Tera. The online BPC is a very huge market. Nykaa has got a very strong recall there. But I think, even Tera is going to start making some inroads, and you'll see positive impact of that as well. And I think apart from that, if you look at the other online retail business as well, the growth rates have been far superior. And also to articulate to the fact that the Jio business remains to be strong, they are consistently working to increase ARPUs through various ways, whether you call it Jio Fiber, Jio Air Fiber, which is there. So I think all these means are going to lead to a better ARPU over the medium to long-term basis. And of course, there is a healthy subscriber addition because the other part of the market is struggling. And I think they are right now, looking at Disney acquisition as well. So I think they're trying to target this entire ecosystem via the best content offerings, which other telecom players may not be able to offer.
Okay, in fact, we're getting more details on the average revenue per user as well. The ARPUs have come in at 181.7 rupees. This compares to 180.5 rupees last quarter. So even on a sequential basis, it's a growth of around 0.6% that we've seen in the average revenue per user. And if you see the last 5 months chart, right, there you have it on the screen. 5 months ago, the ARPUs were at 177.2 rupees. It's gone up all the way to almost 182 rupees. So it's a steady growth that we're seeing in Reliance Jio as well, as far as the average revenue per user is concerned. The subscriber base of Reliance Jio has also gone up. It's now at 459.7 million, the subscriber base, compared to 448.5. And the net subscriber additions have also come in at 11.2 million versus 9.2 million. So any way you cut it, the Jio numbers are strong. It's a steady state, actually. It's been 4 consecutive quarters of 52% plus margins for Reliance Jio. Now, there is some commentary that's coming in from Mukesh Ambani, the chairman and managing director of the company. He says that Jio remains committed to the vision of a digital India through the launch of 2 innovative and transformative offerings, which is Jio Air Fiber and the Jio Bharat phone. And he also states that by December of this year, they will complete the pan-India rollout of 5G services and set a new global benchmark for the fastest rollout of a 5G network across the large nation. Prakash Diwan, your thoughts on Jio's numbers? You, of course, mentioned them briefly, but 181.7 rupees on the average revenue per user. This has been a steady state performance from the telecom business. Your view on how the stock may open on Monday?
Sonia, so, the Jio numbers, the ARPU change might seem very nominal, but remember it's across a very significant increment in subscriber base, right? So that's what I was mentioning. So they could capture that 3%, 4% improvement. I think the numbers on the retail side are stellar. I mean, there's no other way to describe that. It's so promising that you will start wanting to look at Reliance as a company that's growing so fast on the retail front that the O2C business might, at some point in time, might just kind of be playing second fiddle. The market would probably take this with both hands. That even in spite of a slow quarter, retail has done well. Jio is consolidated, improved subscriber base, and improved ARPU. So, and the stock hasn't really done too much, thanks to for the mood in the market. So for all this is after a long time, the stock would start doing well post results, which usually doesn't happen in Reliance. But I think these numbers do warrant that kind of anticipation on the stock.
Prakash, we do have some more details on the retail business as well. Abhijit was wanting to know the investment income of the retail businesses this time around. On a revenue of 68,900 crores, revenue from operations, that is just around 200 crores, so has not added as much. Most of the growth is on account of strong consumption baskets. They say grocery, fashion and lifestyle maintained their growth momentum. Consumer electronics had a steady performance despite festive season falling in the third quarter. Remember, we had the Adhik Maas and Shravan factor coming in as well. And we did see them open 71 million square feet of additional storage space in this quarter. The store footfalls were close to 260 million. And the total store universe for Reliance Retail now stands at 18,650. They added 471 new stores during this quarter, and digital and new commerce contributed around 19% to the revenue. Karan was speaking about how Tira has been launched as well, so their beauty business also adding to their overall retail business. All of that doing extremely well. I mean, it looks like the retail business will be the marquee business of the company. In a lot of the annual general meetings, the chairman has said that he's looking forward for retail to be the biggest contributor to the company in terms of revenue and EBITDA too.
Okay, so it's both the consumer-facing businesses, right? A stellar growth in the retail business and stable growth in the telecom business is something that are the cornerstones of the performance this time around. The net subscriber addition has also accelerated. Jio has now added an industry-leading 11.1 million subscribers during this quarter. And the average revenue per user, as we told you, has increased 2.5% year-on-year, coming in at 181.7 rupees. This is driven by both a better subscriber mix across mobility and the wireline, partially offset by the start of the 5G services. Naveen Kulkarni, in fact, is also with us to talk more about that. Naveen, your thoughts? This is, a beat almost on all counts for Reliance Industries, but particularly on telecom, your thoughts?
Yeah, so we were expecting an ARPU of around 182.5. So overall, the numbers look in line, but I would say the subscriber addition has been stronger than what we anticipated. So that's a key operating metric which looks quite strong. EBITDA margins, of course, more or less in line. Mind you, Q2 is not seasonally the strongest quarter for telecom industry. In that, considering that environment, the QOQ numbers look strong. The subscriber additions look very strong. So overall, I would say Jio numbers continue to trend very much on a strong growth trajectory.
Also, I wanted your thoughts, Naveen, on how you're approaching the stock now, because the stock, still has some headroom. Perhaps it's down about 20% from its 52-week high. Given that these numbers on most parameters are better than what the street was expecting, except perhaps the average revenue per user, as you said, which you were expecting to be higher. But do you think that there is some more, there are more levers for the stock to move higher in the near term?
Yeah, so if I were to look at overall industries from a valuation perspective, currently I would say that at these levels, the stock looks slightly undervalued, considering the stock has corrected by almost 20%, and even at 20% higher levels, it was not in the expensive zone. If I were to break it down, the retail business is roughly around $100 billion business, and then, of course, Jio is also a very, very substantial business, considering it should be in the range of around $70 to $80 billion. And then, of course, the O2C and the other businesses are also very, very valuable businesses. So from that perspective, I would say that from the current levels, the stock seems to be not fully valued. There is, I would say that at least 10 to 15% discount from the fair value levels that I tend to see from current levels. Of course, it remains to be seen that whether there will be further upgrades in earnings or not. But overall, intrinsically, I feel the stock is undervalued at current levels and there is more upside in the offering.
All right, most upside in the offering is something that the street would take given its weight on the index. We'll also see a bigger upside on the Nifty were Reliance to move. But, coming back to Prakash, also, Prakash, a word on the oil to chemicals business. Yes, year on year, there has been a decline in the revenue, but that's largely on account of a 14% reduction that we've seen in crude prices. The important part is that the segment EBITDA has grown by 36%, and that's on account of the strength that the company's seen in the gasoline, PVC, and optimized feedstock sourcing that they're talking about. 16,000 crores is the EBITDA that's the company has reported in the O2C business, a business where the EBITDA is more important than the revenue because that's just contingent on the realizations of the commodity price itself. This is still a large EBITDA contributing vertical to the company. Your thoughts on the environment here and how one should look at this business?
So, that's an interesting point that you make, Mandlam. The EBITDA has grown primarily because of, the maintenance of the EBITDA growth is primarily, I think, attributable to volume growth and not just, price realization and things like that, which can be fairly volatile. the way to look at this would be while retail and Jio start getting the company far bigger growth and accelerated growth, the O2C business starts forming providing the backbone to make sure that it's a steady state business that keeps on coming, which is almost right now 50% of the revenue contribution. So I see if that EBITDA percentage keeps on getting maintained while the Geo Air Fiber and the Geo Space Fiber and the retail vector starts working, that's going to be the ideal combination. So what is it as a company that it could offer? A very solid, strong backbone of O2C, steady business, globally mapped, globally, potentially growing, and Geo and retail to kind of, start offering you the new age consumer-facing business, as Sonia also rightly put. So that's the kind of expectation that the market will start building from O2C, and not expecting too much of investments going into it and worry about too much of return on capital to be maintained from there on.
Just a word on the volume growth. He said that despite the realization decline, there has been a volume growth. The company has given some details. There was 66% growth in KG D6 volume, and that improved the oil and gas segment earnings. At the same time, they also saw incremental production of gas and condensate coming in from the NJ field as well. So those are a couple of things that did well for their oil to chemicals business.
Okay, for the oil to chemicals business, I also wanted to make a mention on the telecom business. So while Naveen Kulkarni was also making this point that the average revenue per user, the expectation was 182 rupees. It's come in at 181.7. So maybe this slightly lower than expectations. The bumper number is really the subscriber addition. It's much stronger than what the street was expecting. And I was calculating it, the subscriber addition has gone up 21.7% quarter on quarter. So this time they've added 11.2 million subscribers. This compares to an addition of 9.2 million last quarter. Naveen, this is really much better than what the street was estimating perhaps. And the subscriber base is now at 460, almost 460 million. How are you looking into it? Would you expect the company to build on to this number? And would you raise your earnings estimates, particularly for Jio, based on what you've seen this quarter?
Yeah, very likely. Because see, the environment that we are in, telecom subscriber additions have been hard to come by. We are not in 2010 kind of a scenario where adding 2 crore subscribers or 20 million subscribers was not that difficult. Right now, in this kind of an environment, a subscriber addition is rather difficult, and Jio adding close to 11 million subscribers is a very, very strong number, and that too in a quarter which is not the strongest quarter of the year, right? So I think overall from an operating performance point of view, this is a very, very strong quarter for Jio. ARPU number can move up and down, plus minus 0.5% miss is not very, very significant, but overall the ARPU, the subscriber addition and margins being maintained on a sequential basis says a lot in terms of how Jio is shaping up in terms of the overall growth trajectory.
Okay, very strong quarter for Jio on the back of the subscriber addition, the net subscriber addition going up quite a bit. Karan Taurani, I wanted your thoughts on, in the retail business, as Mangalam was telling us, very, very strong growth is what we've seen. The retail revenues itself, almost 10.5% growth, now sitting on a base of 77,000 crores of retail revenues. You were talking about how they have many, businesses that are sort of coming up in a big way, whether it's something like a Tira, which is adding to their profile now. Do you think that these margins of almost 8% and this double-digit growth on the top line is something that Reliance can maintain in their retail business in the second half of the year as well? And would you scale up your earnings estimates for the full year?
Yeah, so I think if you look at the growth rates, I think the growth rates will amplify in the second half because of festive season. I think this is, that despite the Shraddha season and the Adhik Maas coming in, they have been able to maintain these kind of growth rates. So I think because of festive, the momentum will accelerate. I think fashion lifestyle will be the biggest driver here. White goods also, you'll see growth rates accelerating from 13-14% range more towards 18-20% in the second half. So I think there is a potential, for some sort of an earnings update as far as retail numbers are concerned. But again, just to add on the telecom bit, I think the subscriber addition is also coming because of 5G. I think in terms of 5G adoption, in terms of having the largest 5G base today, Jio has been the most proactive. And they've also got the first move advantage, versus peers. So I think even this is kind of playing out as far as subscriber addition is concerned. And the second driver for the subscriber addition is also people moving from 2G to 4G. Because even that is one of the intents that the company has actually panned out. And if you look at the average quarterly subscriber addition, 3 to 4 quarters back, it was around 5 to 7 million subscribers, which has now come to almost 11 million plus subscribers. So I think there is ample amount of growth there, and I think ARPUs will kind of come over the medium to long term basis, once they have a larger chunk of the market, because as I told you, they've got a very strong hold on the entire content ecosystem. So I think ARPUs will come by. It is now only about getting a larger chunk of the entire market.
And Reliance always seems like a company which is forever on a growth path, because this quarter itself they did a capex of close to around 38,800 crores itself, most of them internally funded. And speaking about the retail business itself, Karan, I was looking at some of the internals out here, and they are extremely strong. Consumer electronics grew at around 11%. You said that it would be fashion which would have led the growth. Yes, indeed, fashion and lifestyle is up 32%. And we have Agio, which has grown by about 50% year on year. Grocery itself hasn't done too badly. In fact, in a quarter where, people are looking at downtrading or smarter, cheaper options, Reliance Grocery has delivered a quarter of record performance with a 33% growth, led by Smart and Smart Bazaar formats, largely because of the value offering that these, channels did for the company. To add to that, they've also made a couple of acquisitions. They, during the quarter, bought the IP of Superdry in a couple of neighboring countries, India, Sri Lanka and Bangladesh, and also acquired Edamama, which was a kids and maternity brand. So with this and the 15,000 crore fundraise that they've done, it looks like they're not only on a massive growth path, but it's growth path on a high base as well. So 77,000 crores is the revenue that they already do in a quarter, which is much more than the industry combined in an entire year. And add to that, you have all these guns which are still waiting to fire.
Absolutely, absolutely. So, I just want to get Abhijit Bora into the conversation as well. Abhijit, if you had to summarize everything for us, right? I mean, it's a beat on most counts for the company. The growth in the retail business is stellar this time around. There's a stable growth in the telecom business. In fact, the net subscriber additions, as we've been mentioning repeatedly, is very strong. And the company says that by December of this year, they will complete their pan-India rollout of 5G services as well. Given all of this, what kind of an upside do you see on the stock? Because as we've been mentioning, the stock is still down about 20% from its 52-week highs. What's your target?
We have a target price of 2880 currently. And given the underperformance, we expect that post such a stellar performance, there will be some catch-up in the stock price in the near term. And the important thing is that long-term consumer growth drivers are intact for the company. Even the Jio Financial Services, once they ramp up, they will create a long-term value there also, apart from the retail and Jio business. So consumer basket will grow. So we are quite optimistic in terms of overall growth potential for the company. And we have a buy rating on the stock.
What's your target price, Abhijit?
2880.
2880, all right.
Okay, 2880. And what about you, Prakash? Just before we wind up, any final thoughts on the numbers, the target price on the stock, and how do you see the stock open on Monday?
So, Sonia, as I said, while the catch-up might not be just a day-long affair, it could take some time. Remember, retail is moving very quickly, moving to justify a valuation which is definitely upwards of 8 lakh crores in market cap. We've seen that as the market cap, deemed market cap for all the investments that have come in the second round. But I would believe if you were to attribute about 8-10 lakh crores of market cap to retail at Jio, Reliance as a company is available at just about 15 lakh crore market cap. So there is definitely a huge catch-up. I think at least a 20-25% kind of a catch-up. Now that could take 3 months, that could take 6 months. But I think the under-ownership will trigger, with these kind of numbers, the under-ownership will trigger a lot of interest in playing it safe. And remember, this will happen once ETF money also starts coming back, given the kind of weightages that Reliance has. So all that, subject to all of that getting timed well, I think the stock would move back to those 28,000-29,000 levels by December end itself.
Should we call it your Diwali pick then?
It's always been one of the favorites, Mangla. It's something which stands the test of time, given the kind of huge scaled-up growth that they always look for. I mean, it's not just like a hesitant player that is trying new things out. It's so decisive that it's really impressive. Retail, by the way, is number 9 or number 8. I'm not too sure with the global ranking. You have a global business available to you at such low market caps. you can't miss it, whether it's this Diwali or the next couple of.
All right, gentlemen, thanks a lot for joining in and helping us understand the numbers. Prakash, Abhijit, Karan, Naveen, thanks for being with us and have a great weekend. So those are Reliance Industries numbers. Just to summarize how the numbers have been, it's a beat on most parameters. Earnings are better than what the street was estimating. The star of the show undoubtedly is the retail business. So it was a stellar showing over there. 10% growth in the top line for retail business, margins coming in at 7.4%. Stable growth in the telecom business as well. The average revenue per user has increased 2.5%, but it's the subscriber addition that is very, very strong this time around. Jio added an industry-leading 11.1 million subscribers in this quarter. And the management says that by December of 2023, they will complete a pan-India rollout of the 5G services. Overall, the numbers are on your screen. Thanks a lot for watching this special coverage. We'll be back in just a bit.